Okay, hello everybody. Welcome to Korean Atlanta Mentorship. And in this video, we're just going to do another velocity banking review. So, before we get started, I'm just going to tell you what's probably happened to you if you've been watching these videos and been really excited about learning velocity banking. The first thing you probably want to do is share with the people that you know, like, hey, look at this thing called velocity banking. And I'm going to tell you the sad truth for probably 90% of you, okay? Maybe there's a good 10% where this didn't happen. Well, I'll say this probably happened to 90% of you. And you probably either got into an argument or you were shown disinterest or you were, people didn't seem like they were happy for you to discuss these types of topics, right? And I'm going to tell you the sad truth for most of you is that the people you know want you to be poor, right? Like they want you to be poor. That's why when you have quote good news to share, and I know that sounds like something a cult leader would say, hey, share the good news, right? Bring him over to a meeting. But you share what you've learned throughout throughout these videos, and then you see like it almost irritates people, right? It's like the lack of interest, like what's going on, right? And I'm going to tell you something as a person who paid off a mortgage in 2 years and 9 months, because this is literally my mortgage statement, I paid off in 2024, first payment November 1st, 2021, last payment in July 29th, paid off in 2 years and 9 months, and again, I'm saying it again because 'cause I'm bragging, flexing, I gotta flex. Um, there's very little interest shown to me, like, especially when I tell people in real life. Online's a little bit different because people are actually searching for you online, about like, what do you mean? How did you really do that? And I'm like, all right, well, if nobody's interested, maybe everybody's well off. That's literally what I think nowadays, because every time I tell people this that I did this, like people can't ask questions. You know what I mean? And eh, here's another thing that I was able to do. My first rental check, believe it or not, was like 12 grand. It was in 2022 when I bought a rental property for $100,000 discount, but my first rental check was 12 grand. Now this is 2024, but I got several checks like 10 grand, 12 grand, 14 grand from one renter prepaid, right? So it's not like I got that every single month. But it's funny that like I'm able to do this, and people are not like, they're like, how did you do that? Like, well, what did you do? And they don't really seem to be curious, which is kind of, I don't know. I already I know why this happens, and the reason why is because people think that if they support you or just even ask questions, um, that's you know because people have a zero sum mentality, like zero sum. If you don't know what that means, like if you win, that means I lose. That's why they won't ask you, right? Because them asking a question is like validating you. It means that you've won. You know what I mean? Even though like you may not think that way. But that's the sad truth. The people that you know want you to be poor. And that's why they might even get angry at you and start arguments even when you try to introduce this stuff to them, right? Velocity banking. All right. So all right. So before we get started, let me go ahead and ask ChatGPT, why is it when I okay, let me just do this. I paid off my mortgage in 2 years and 9 months using velocity banking for context. Why is it when I tell other people I paid it off in such time, their brain seems to short circuit and they don't ask any questions at all, and it almost feels like they're trying so hard not to uh uh, to to act like they didn't hear me. All right, so let's go ahead and see what's up. Chat GPT. Pretty common psychological and social phenomenon. All right. Okay, let's go ahead and do that then. So let me go ahead and play this.
What you're describing is actually a pretty common psychological and social phenomenon, especially when you share something extraordinary or that contradicts people's beliefs about what's financially possible. Here's why people might react that way when you tell them you paid off your mortgage in 2 years and 9 months. And one, Cognitive dissonance. Most people are conditioned to believe that paying off a mortgage takes 15 to 30 years. When you tell them you did it in under 3, it conflicts with everything they know. That mental discomfort, cognitive dissonance, can make them disengage or pretend they didn't hear it because it's easier than confronting a contradiction. 2. Ego threat. For many, money and debt are emotionally charged topics tied to identity and self worth. If someone has been working for years and still has a long way to go on their mortgage, hearing that you paid yours off rapidly can feel like an implicit comparison, even if you didn't intend it that way. 3. Lack of familiarity with velocity banking. Most people have no idea what velocity banking is, and the strategy sounds complex or too good to be true. Instead of asking questions, they might default to skepticism or shut down to avoid appearing uninformed. 4. Social norm violation. When you break a norm that everyone assumes is universal, like a 30-year mortgage, it can cause a moment of awkwardness. People often don't know how to respond, especially if it feels like the topic requires technical or financial knowledge to engage with meaningfully. 5. Subconscious jealousy or insecurity. Some people may interpret your success as a reminder of what they haven't achieved, and their ego instinctively puts up a wall. It's a defense mechanism. They emotionally tune out to avoid feeling inadequate or behind. How you can handle it. If you actually want people to engage more, you might try framing it more like a story or offering an opening, e.g., I tried something unconventional, and it actually let me pay off my mortgage in under 3 years. Ever heard of velocity banking? That lowers the perceived bragging signal, piques curiosity, and invites dialogue without triggering defensiveness. Would you like help crafting a concise explanation of velocity banking you can use in conversations?
Let me ask a follow-up question. Does that mean their ego demands that I fail? Not exactly, but close in some cases. It's not always that your ego demands that you fail, but your success challenges their narrative, right? Oh, that's probably a scam or only works for rich people. Anyway, did you see the game last night? Oh, this is a good one. Okay. All right. Well, let's go ahead and get started with velocity banking. So, what is velocity banking? All it is a debt payoff strategy where you throw all of your money into debt. And if you take a look at this, I'm just not saving any money. So, it's kind of like saving money, not saving money rebranded, not saving money 2.0. Okay. So that's what we're going to do. And we're going to do this with the help of something called a line of credit. And I'm just going to do the same exact situation that I did in the previous videos. Did you know I have over 1,000 videos on this channel now? It's crazy. How did I make so many videos? But it's such good practice that I can just crank out one video after another, just do these spreadsheets over and over again. And that's what we're going to do today. We're going to pay off debt. Okay. So let's go ahead and pay off debt. And so the first step to velocity banking is actually just doing a budget. Okay. So you have your income, you have your expenses, you list every single debt that you have, right? So in this case, it would be 10 credit cards, a personal loan, an auto loan, a student loan, and a mortgage. Okay. We got one of them cheap mortgages at 2.5% that everybody was having in 2020, right? And then anything that's not debt, right? We just put in a category right here: food, gas, insurance, all of it right here. And this is always going to be there, right? In the business world, I think it's called operational expenses. And so what we're going to do is get rid of all the debt and use something called a line of credit to help us do that, right? And so what we're going to do is same income, same expenses, but okay, this is going to be the crazy part. We're not going to save any money. So you see right here, there's this little savings bit, and you notice that this is a big fat zero. So in traditional banking, in the average American banking, your main operating account is the checking account. You pay for things out of your checking account, and then you leave your leftover savings into that checking or savings account, right? Now, in this case, we're a negative $421. Okay. Now, with the help of something called a line of credit, okay, a line of credit, we don't have to necessarily make more money, although making more money is fantastic, but we're going to increase something called our cash flow, and we can only achieve this by not saving money. Okay. So if I take a look here, and you see this big fat zero, a lot of people would freak out. It's like, whoa, you got, this amount coming in this much, but you're just you're not saving it. And I'm like, nope, not saving it. Where's that money going? It's going to something called a line of credit. And what's a line of credit? Well, all it is a financial tool where you could borrow money, pay it back, and then use it over and over again. So this is my $280,000 home equity line of credit. They charge me 7.5% interest. So basically, I can click a button on the bank's website and then they'll dump up to $280,000 in my checking account. And I think this was me, when I signed the paperwork at the, with the attorney, okay? When I first had access to that home equity line of credit, I believe it was me. Maybe it's not, but it felt like me. Okay, $280,000. So credit card technically is a line of credit, but the home equity line of credit or personal line of credit is in certain ways better because you get lower interest rates and you get unlimited free access to money in most cases, right? Well, not free money, but access to money. Okay. Like credit cards, you can't use it to pay a student loan or credit card. But with the line of credit, yes, we can. And let's go ahead and do this. We got 10 credit cards, and then we're moving, and we'll assume we have a 10%, $200,000 home equity line of credit. 200,000. Now, here's the thing. Banks aren't going to lend you, especially if you're negative, a new line of credit, right? Because I know the secret of banking. And the secret of banking is that something people don't want to admit is that banks don't lend money to people who need it. Banks don't lend money to people who need it. Yeah, that's the secret. Okay. And people are like, you don't know what you're talking about. It's like, all right, well, I got over 594. Maybe one day, 1 or 2 years is probably over a million. But right now, currently, I have over $594,000 in lines of credit. 594,000. Okay. Banks don't lend money to people who need it. And so just be aware of that. But what if you did have a line of credit? What if you did? Okay. The sweet, kind of like the sweet, sweet $280,000 line of credit. Well, guess what happens here? I'm just moving $167,000 there. And then, okay, because that's how much the credit cards are 10, if you sum up the balances, then guess what happens to the payments? They go to zero. Yep. So if we take a look at this now, okay, and this is the part where a lot of people's brains will short circuit. You literally went from negative $421 in savings to $4,924.27 in cash flow. Okay. And then the final step is you put your entire paycheck, $10,000 into that line of credit, and then you take your expenses out. Okay. And then you rinse and repeat over and over again. And then the balance of the line of credit will go down by 4,900. Okay. So let's go ahead and demonstrate that, which is, we'll do this right here. So 10,000 goes here. We take 5,000 and let's do the math really easy. All right, so this is going to be previous month's balance, previous month's interest. Get the next month's balance is based on the previous month's balance, previous month's interest minus our cash flow, 4924.27. And then we're going to take the interest, which is based on the average daily balance, right? And then multiply by the interest rate, 0.1, and divide by 12. And then for that month, we got to pay $1,000 of interest. Okay, so let's go ahead and do that. And then we see, okay, we see that in 40 months, we have it all paid off. 40 months. All right, so we paid off the credit card debt, 40 months. And then this is going to be 167K. And then I'm going to do this. Okay. And let's see. All right, so if you don't know what this is my loan calculator, right? So all you got to do is just type in the current month, which is 40, 40, 40, 40, right? And then we use something called the cash flow index. If you don't know what it is, it's just the balance of formula with the balance divided by the payment. And then this is the, all right, so balance divided by the payment, and then this will give you arbitrary number. And then the lower the number, okay, that's the ones you want to pay off because it's like a ranking system. So these are the two lowest ones. So let's go ahead and pay these off. And I'm going to do that. So be G2, G3. and then be 13 grand. Okay. 13 grand. And this is going to be plus 13809.52. And then by simply moving the loans into the line of credit, which is these two, these go to zero. And then we have an extra cash flow. So $5,483.63. And then we're going to go ahead and do that. And then I'm going to do this. And so this is 5483.63. Okay. All right. So we did that. And then, okay. So how many months was that? So let's just take a quick look. That was 43 months. 43 months. 43 months. And then this is going to be 167 plus 10 plus 23. So 200K. And then student loan at 43 months. How much is the student loan? 43, 43, 57 grand. So let's move 57 grand into the line of credit. 57 grand. Okay. Plus 57484.75. All right, and then this is going to be zero, and then we get an extra 900 something dollars back into our cash flow. So that's going to be 6 grand into here, and let's go ahead and do that. And I'm going to do this, and then this is going to be, so 6412.5. Okay, and then we see that in about 52 months, it is completely paid off. All right, so 52 months. And then this is going to be 280K. And then this one should be really quick because we have so much cash flow, 6 grand. And at 52 months, what is the balance? So 52, 224,000. Now, quick nuance, you don't always want to move a loan into a line of credit, right? There are certain instances where, A, if you have enough cash flow, then that's fine. But with a 30-year mortgage, right? Because you're paying 224,000 just for this itty bitty $987 of cash flow, the if there's a difference between the loan and the line interest rate, it's gonna matter. Okay, it's gonna matter. So luckily, there's this thing called chunking where if you just dump, a piece of the loan into the line of credit, you should be fine. And actually, let me go ahead and open up the velocity banking calculator. Give me one moment. All right, here we go. Here's the velocity banking calculator. And actually, let me take a look here. So what's the current balance? 224,381.66. So 224,381.66. And then our income's $10,000. Or not 100,000. That'll be sweet. 100,000. $10,000, and our expenses, everything except for the loan we're trying to pay off, which is 2,600. So let's do 2,600. And then let's see the difference between moving the entire thing into the line of credit, which is 27 grand of interest in 2.9 years. You see that? Versus doing small chunks. Let's do a $10,000 chunk. And you see it's 8 grand and 2.7 years, right? So just got to be a little bit careful with the 30-year mortgage. That's all I'm saying. But a lot of people on the internet are promoting always move your loan into a line of credit, which is not always the case. And if you don't know where I got this velocity banking calculator from, I got from Renatus. So if you're interested in not only learning velocity banking, but a few other things and possibly joining a cult, click the Google form link below. All right, so let's go ahead and write this right here. And 0 and 52 months divide by total plus 2.7, and we are debt free 7 years. Okay, 7 years debt free. Woo, well, that was pretty easy, right? And now we got all this cash flow, $7,400. Beautiful. Okay. All right. Well, that's it for today, folks. This is Korean Atlanta Mentorship. Hopefully, your brain didn't explode from watching all of this, or even my mortgage that's paid off in 2 years and 9 months. Right? Let's stare at it just a little bit more, so we can see the taste of financial freedom. Okay. All right. Well, that's it. And this is Korean Atlanta Mentorship, and I'll see you all next video.